Good morning, everybody. Happy Wednesday to you all, the week before Christmas. Exciting. End of year is coming up. For those who don't know me, this week I'm going live in several places, so hopefully this is not going to be too clunky. I am Christina Springstead. I am the founder of Springstead Solutions. I am a certified Profit First professional, and I am also a digital course creator, Permanently Profitable. So I am here looking to provide value to clients and people who need some assistance with being a small business, an entrepreneur, or an independent contractor, and keeping their finances in order and developing a system in place to be profitable. So welcome and good morning, everyone. As you've probably seen, I am using StreamYard. There should be some instructions up above that tell you how to give StreamYard the permissions for me to see your name if you post or comment within here, so I can respond and you don't just become a Facebook user or YouTube user or whatever that is. So good morning, Morel. Happy Wednesday. Nice to see you on here. So today, as it implies, I wanted to talk to you all about financial reporting and how that can help give you some clarity or getting clarity from your financial reports. It is the end of the year. I am in the midst of doing lots of end of year bookkeeping for my clients and providing them with reports that they need or ones that we just provide because the system does, and making sure that clients are using their reports, right? So hopefully we're just going to talk about several things about financial reports, making sure you're getting them for one thing, making sure that they're usable for you, and giving you some ideas on some tweaks that you might be able to ask for or some adjustments you can make if you're a DIYer. So so welcome and happy Wednesday. So the first thing on financial reports, right? You're going to need them for your CPA. You're going to need them to get ready for tax time. So close, it's like breathing down the backs of our necks, right? So biggest thing is if you are getting financial reports from your bookkeeper or your CPA, if you're not a DIYer, making sure that you understand there's two different types of reporting based on your business. And so there's accrual reporting and there's cash reporting. And I often find that most people don't know what that means. And so I always want to make sure that people understand it and you're getting the reports that matter to you. So accrual reports, which typically in softwares like QuickBooks, that's like the default report that runs. And so what that means is these reports are based on when you accrue income and when you accrue your expense. So if I do monthly bookkeeping services for someone, or I completed a task today and I'm going to invoice that out, that is my accrued income. So it's close to the end of the year. So if, say I finished a $100,000 project, right? We can dream, let's dream. So I wrapped up a $100,000 project today and I sent the invoice for it. I've accrued that $100,000 in income in 2020. My client likely is going to pay that bill probably on 12/31. So they can get the benefit of paying the expense. I'm not going to actually see that in my account or arrive to me until sometime in January. So that is the cash reporting, right? So I've accrued, if I ran my reports in an accrual mode, I would have had $100,000 in income in 2020. If I turn around and run it in cash, I would have $0 in income in 2020 because I wouldn't actually receive that income until 2021. So that is a big difference, and that usually really comes into play towards the beginning of the year, end of the year, especially when it comes to tax time. So important for you to know what is your tax basis when you're filing them. Lots of people, especially small businesses, are typically cash basis. And so you seeing your reports in a cash basis is important. So make sure you understand what it is that you're wanting to look at. And if you're looking at these reports for purposes of tax time, make sure your reports are reflecting how you file your taxes. So again, accrual is when you've accrued it. This is the same for expenses. So if I say I have rent for an office space, right? And I accrue, so at December 1st, I accrued my rent bill. I've owed $1,000 for my office space in December of 2020. But I don't write that check until January 1st, right? So I'm always a month behind. I'm writing it 30 days later. When I go to file my taxes, if I was accrual, I would have $1,000 of rent deduction. But if I was cash, I wouldn't get that rent deduction until 2021. Hi, Facebook user. I can't see who you are. If you can, StreamYard, there's just a little, you have to approve it. I think it's up in the comments. So I can't see who you are, but good morning. So we are talking about cash reporting and accrual reporting. So again, important for you to know when you're getting your financial reports from your provider, or even if you're doing them yourself, make sure you know which report it is that you need to use. Lots of people will just default get some accrual reports and they might not really mean anything when it comes to tax time. I'm a cash tax payer, and so all of my reports I get in cash. I do look at the accrual ones because I kind of want to know, hey, in a perfect world, if I got some income and I got paid the same day and I had an expense and I paid it the same day, what does my business look like, right? So accrual is really good with, hey, this is money that's still owed to you. It gives you a good idea of, oh, I did some work from someone. Maybe you have some, people that don't pay. You can see like, oh, this was due to me. So they serve a purpose, but you really want to be focusing on the reports that tell you what you need to know. So you can get them both and review them both, but make sure you're spending time on the ones that work for how you're filing taxes. So hopefully that makes sense. If you have any questions, drop them in the comments. I am trying to monitor the Facebook ones, and I think my staff is helping me monitor the YouTube ones. So we'll see how this goes. And if not, I'll be over there to check to see if anybody's on YouTube yet. I'm brand new to that, and if there's any comments. So, so the other thing I want to talk about is reports. Are you getting them? Which ones are you getting? Are they serving the purpose of what you need? Do you just get them and file them away and never look at them? How are you using your reports to best benefit you? So I think one of the most important things is when you, and I'm going to speak to the people who have an outside provider. I do bookkeeping for people. And so it's important when you're talking to your clients that you understand what it is that they need. And as a client, you need to understand what it is that you want to know and ask your bookkeeper for that. So I'm going to have a conversation with this later in the year, but make sure that your providers that you're working with, you're comfortable enough to ask for what you want. If they just give you canned reports out the gate because that's what they get and they're not really willing to make sure that the information you're getting suits you, you might want to find a different provider. So that's just there. But so the reports that I provide and absolutely suggest that you all get is the profit and loss and the balance sheet. Like those ones are pretty standard and pretty common. And so the profit and loss, some people look at it and they're like, oh, okay, yeah, I get it. Profit loss. And as most of you know, I'm certified Profit First professional. So the P&L is a great place to go. And then we kind of work that P&L a little bit backwards to fit the Profit First model. But the profit and loss really, it is served to tell you how much money your business makes. And if it's ran really well, you can include details for where your money is coming from. So meaning if your system is set up properly, say you have 4 different services. I do bookkeeping, I do payroll, I do Profit First, and then I do some special projects like cleanup work. I track all of that in my system based on the type of project I'm working on so that at the end of the year, I can say, yes, I made this much money, but how much of that came from each pocket of income? Because that's going to matter to me. Now, when you're a small business, you're just getting started, definitely start tracking that immediately. And then as you're growing and you're building in your business, you can start doing some comparisons, like compare it to the year before. And you can see where your income was coming from. And do you have a certain piece of your business that is growing exponentially compared to the other ones? Are you getting so large that you're thinking, oh my gosh, I have so much happening? Is that your indicator that maybe you need to niche down? Maybe is there one area that's just struggling and you're putting effort and all that, or having staff time on something that really isn't paying the bills, and you say, okay, well, I'm going to cut that service out because these ones are growing exponentially. And if I pay attention and put all of my efforts into that, then my business can grow and move to fit the goals that we have. So I would say to you, make sure that when you're tracking your income, whether it's a spreadsheet, whether you're using a system, whether you have a bookkeeper, think about those things that you want to know, that you want to track. I highly encourage you, if you're offering multiple things, track by your product, track by your divisions, right? I'll call it, I have a payroll division, I have a bookkeeping division, I have a Profit First division. I like to feel like I'm, big. But I like to track my income by the division so I can see where is my time going. And then I can also look at those things and say, oh, I really enjoy doing this. And maybe it's growing to a point and the part of your business that you really enjoy and want to do isn't growing. Well, that can then help you as what kind of business do you want? Do you want to change your model, and maybe you need to stop taking certain clients here because it's not fulfilling the needs of where you want to go in your business? So lots of good information you can get from your profit and loss. So make sure that's getting set up, and ask your bookkeeper or your CPA, or go into your system and figure out, how do I set this up so that when I get these reports, it's meaningful information. It's not like this just number and you're like, okay, that's the number. And it can be used to tell you so much more. So you should review it monthly. And again, as you're growing bigger, start looking at different areas. Maybe you want to compare, quarter. I look at my stuff and I do, I actually look at the month and then the year overall, and then I'll compare it to the previous. That might be my financial brain and I'm just diving in there, but definitely work with your provider and make sure that that's set up. Look for those trends, use it as comparison, and use that to help you set the goals for where your business is going. The next one, your balance sheet. The balance sheet, everyone should get it, and most people look at it and be like, that's great. It balances, right? Like it's the goal of it is in the name. It's supposed to balance. And so the purpose of the balance sheet out the game is it's a snapshot of what your business has and what your business owes at any point in time. So it's just, you pick a point and time, and that's what it is. And so your assets, right? So there's assets, there's liabilities. Your assets will include like your bank accounts. How much cash do you have? Your accounts receivable. So this is, we're talking about the accrual that we just talked about a little bit earlier. How much is owed to you that you haven't collected yet? And then investment accounts, if you have it. Maybe you've got some investment, maybe you've got some real estate investment in your business. Whatever an investment account for your business, that could be included on there. Other assets, like I said, property, computers, equipment. So if you get to where you're buying these big ticket items, furniture, physical stuff that you could sell down the road, those could be included on the asset as well. And then, hey, Rob, happy Wednesday. Glad to see you on here. And then your liabilities. So these are going to be things, if you use company credit cards, who doesn't these days, but if you use company credit cards, those are going to be your liabilities. Those are going to be showing up how much do you owe, how much is going to be due to go out, any business loans that you might have. So right now, PPP is probably showing up there, EIDLs, maybe those are going to show. And then anything else that your business owes to someone else. And those are all going to balance out at the end of it. So that's just a good thing to be looking at, the snapshot of what you have and what you owe, and then coming out there. And hopefully that snapshot looks like assets are in really good place, right? So you've got equity in there, you've got profit, you've got, cash in the bank, you've got whatever, and your liabilities are not kind of overwhelming and eating all that, because that is a picture of really the health of your business. I also encourage, so profit and loss, balance sheet, we'll talk about cash flows in a minute. Those are kind of the big three that most people will give you. But I would, if you're a small business, encourage you to also ask for information and get things set up about your receivables and your payables. So if you're a cash-based business and you don't track it, right, you're just exchanging hands, you might not have this. But if you're a service-based business and you're invoicing out when you complete something, the receivables is really going to help you. How are you doing on your collection side? If you've got like a massive amount of receivables in there, are you not spending enough time sending out statements? Are you not sending invoices on time? Are you someone who kind of is a bad picker when it comes to clients, and you pick clients and you're doing all this work, and then you have people who can't pay, don't pay, won't pay, right? Like, I think we've all seen a business that has like you just get in this really bad cyclical of bad clients who don't pay. If you've never experienced it, you maybe know of someone who does. And so receivables are really important. So if you're a service-based business and you're not trading something immediately in the moment, you should be tracking that and be knowing and making sure that you're doing some collecting. So if it's spreadsheets, whatever, just make sure you have that system so you're not leaving your money out there, and then you're making sure to watch your business dealings with people so that ideally your receivables aren't out of control. Product-based businesses, a little bit different. I came from running a sign shop, and we did lots of invoices, net 30, and we had to watch that. So if we kind of slipped and didn't do any collections, we could have stuff that was 120 days plus aging. And when you let it go that far, it becomes harder and harder to collect. And sometimes people don't get the invoice. We would have people who would come in and pick it up, but the invoice never got to the payables department, right? And then we're trying 6 months later to collect it, and they're like, why didn't you submit this 6 months ago? So you really should be having a report and watching that. And then get a revenue report by customer, right? So if I'm a service-based business, it's the end of the year. I'm going in and running a report on who are my top clients, who is, has something grown over the year. And in those top clients, going back to the product, the service, the revenue report earlier, like your products and services, what are they buying? And is there something else that you offer that maybe it fits in with what they're doing? And so those are really important for you to start looking at. And then payables. So if you get bills in and you pay them later, you're not paying, cash payment as soon as you need something. You want to know who you owe and how much and when that's due. So very important, your receivables should hopefully always be more than your payables. I always felt like it was such a huge win, especially if they were maybe double or triple what it should be. When you're a small business, sometimes that's hard. But you want to be watching what your payables look like and how much you're owing. Are you in your receivables, you don't have enough cash coming in to cover what you have in your payables? It's a really good trigger for you to know, are you getting in over your head? Yes, if you have more questions, you can reach out to me. Absolutely. You are welcome to direct message me through Facebook. You are welcome to email me. You can go to springsteadsolutions.com. There is a Let's Chat. I'm working on my website, go all the way down to the bottom. I think every page you can get a hold of me. So there's that. So email me, drop comments down below here. I will be in there and trying to respond to everything as quick as possible. Join me on Facebook. I have a group page for Permanently Profitable. So if that is really geared towards the people who want financial advice and profit first, cash management, all of that, I'm in there. You're welcome to join the group. Just search Permanently Profitable. I'm in there. Please answer the questions when you go. I'll also have the Springstead Solutions page. Lots of ways to get a hold of me. So, and I'll try to keep up on all those and respond to you. So yes, please do. Thanks for asking. So back to your payables. Another thing that I like to provide to my clients, and I also do it just to make sure that at the end of the month when I'm doing their books, that everything is really tying out, is I do a transaction list by the vendor. So I give them at the end of the month or maybe at the end of the year, hey, these are all of the expenses that came in by each vendor, and here's where they were booked in an account. Does everything look right? Does everything look good? Because sometimes if you're using an outside bookkeeping source and you don't have, the days of trading stacks of paper are very few and far between. Lots of it is bank feeds, or it's, hey, this is a rule. It's typically, Amazon is almost always office supplies, but maybe in some instance it wasn't. So at the end of the month, I give my clients a transaction list by vendor that shows them the dates, the amounts, and the account that it went into, and ask them to confirm, is everything on here look good? And then we can also see, oh, well, we purchased from Office Depot, right? And so Office Depot is always office supplies, we'll say. Somehow it got booked in there under utilities, a fluke in the system. That's an easy fix to catch it out the gate. And I do that monthly rather than yearly, because trying to go through, if you're a large or a small business, you've been in business for a while, you've got so many expenses you're trying to look through, it's overwhelming. So those are reports that you could ask for from your bookkeeper too, just so that in the moment, it's real easy. Like, you can look back over the month and say, okay, what was that? At the end of the year, when you're trying to get everything ready for tax time, very hard to remember. You don't want to be dialing in or logging into all of these vendor accounts and trying to say, oh, what was that for? Like, just save yourself a little time. So that is a report that I suggest. It's a report that I give to my clients anyway, because I just want to know that we're on the same page and all of those expenses are getting booked correctly. So now we're getting to the cash flow ones, which I mentioned was like the other three of the big three reports. And the cash flow statement, sometimes people look at it and then just move along, but it summarizes for you the amount of cash and cash equivalents that are coming into the company and leaving the company. And so this is really well used to manage how well are you managing your cash positioning. So how well can you generate the cash and then use it to pay the debt obligations and fund your operating expenses, and maybe fund your emergency fund or your profit account or your tax savings. So it's really, if you've ever looked at your finances, right, looked at some reports and thought, oh, the P&L says great things, but my bank account says something completely different, keep in mind that not all things that your cash go towards is on your profit and loss, right? So if you have liabilities and they're long-term liabilities, those don't show up on your P&L. Those come in on other reports. So you need to be, your cash flow is talking about where is all of this money going? Are you doing a lot of draws? Are you taking money out for personal things? Those aren't going to show up on your P&L. And so if you are looking at a P&L and you're like, oh, I think that's one of the things when I got Profit First certified is I read the book and Mike was like, man, my CPA said, oh, you did great this year. You made $10,000. And he's like, well, where's the money? This is a situation of money is getting spent, not on items in the P&L. And if that's all you're focusing on, eventually that could catch up to you. And so looking at that cash flow report is really important. What are you doing with that money that's coming in? Where is it going? And where is it going when it's going out? Is it going to old liabilities that you're getting paid up? And you can actually see, okay, yes, I'm having a profit this year of 25 grand, but I paid off 15 in debt. And so my bank balance is a little low. I need to make sure that I'm making wise decisions to not then accrue more liabilities and more debt later, right? So you want to make sure that you're really taking a good look at your cash flow position. And that's why I love Profit First, is because the system is really designed to help you do that right out the gate in a very structured and systematic way. And so definitely be looking at that one. And if you've had it before and never really dove into it, do that. And then ask your provider, your bookkeeper, your CPA, whoever helps with your finances. If it's yourself, Google. Google's a great assistant when you want. Ask how to understand that and how to make that report work for you, because you really want clarity. And just getting a P&L, which is how I see a ton of small businesses operating, does not give you the full picture. You're just not doing yourself service if that's the only report that you're paying attention to. Lots of reports, right? So those would be the 5 things that I highly recommend, and I'll probably do a little blog for this and get it on my website this weekend. So I'll drop a comment in this in these live videos below and let you know when that's up if you want to kind of re-review this. And then on top of that, I like to suggest that you take your chart of accounts. So if you use QuickBooks or use something and you go to set up your new company, they give you this like canned chart of accounts. And lots of people don't go in and adjust this thing to fit their business needs. They just use the chart of accounts and it is what it is, and things go into random places and there's no real structure. So I work with my clients and say, hey, pull out your tax return. What deductions can you take? Every industry is different. CPAs are different. No real business situation is ever 100% the same, right? So let's structure your chart of accounts to reflect how your business really operates when it comes time to filing taxes, right? Because at the end of the year, that's the whole point of these reports. We want to know, hey, where were we at? At the end of the year, do we need to make some investment decisions? And I say need. And you've got the right information to go along with that. So I look at the chart of accounts, I look at the company's goals and say, okay, what are these things that you want to be tracking, right? Because you can have the main account, which is reflective of what's happening in your tax return. This is my system. This is how I work it. Not all bookkeepers are the same, and that's fine. But I just suggest this because I think it works well for people. So the main buckets relate to your tax return and what can you actually deduct. Then you can do sub buckets all day long. You can do sub buckets of sub buckets. I don't know if you can do subs of subs of subs, maybe. But so you can do sub accounts from there and break it out to what you want to know personally, like what works for you. So you can then make sure like, hey, I'm the type of person, like I've got dues and subscriptions. This is a big one. I book computer software subscriptions as its own line item. I don't lump it into dues and subscriptions because I want to say, hey, how much am I spending on software? Especially now I'm launching a digital course and I have trialed a bunch of things. I have tried out some softwares. In 6 months from now, when I review that, I'm going to want to look and say, hey, what all do I have under here? And I can quickly say, oh, I'm not using that anymore. Or, wow, I am spending a lot on computer software. Is it really helping me put procedures in place that is saving me time, right? Is it worth it? Is this $10,000 a year I'm spending on computer software generating $20,000 a year in me being able to bring income in to pay for it, right? So I highly suggest that you work with your bookkeeper. Hopefully they're willing to do that. You know, right out the gate when you're talking to someone, how do we get my reports to reflect so that I know what is happening in my business. I know what's going to happen at tax time. And if you have a bookkeeper and you're paying them, we are a lot cheaper than having your CPA do your books typically. That's just how it is. And so if you can give your books pretty clean, where the CPA can take data from your reports and put it into your tax return, that's also going to save you money. You can set up your books any way you want. And I used to have this before I kind of really dove into bookkeeping full time. And my CPA was then having to like break out my chart of accounts to then merge it to put it into the right things in the tax return. And I was like, well, hey, why don't I just fix my chart of accounts so you don't have to do that? Because I'm always wanting to know, like, hey, what's my tax return going to look like? Well, I might as well have my books, kind of reflect that out the gate. Why not? And so your chart of accounts is flexible and doable to be ready for tax time, to make it easy on your CPA. And plus, the easier your books are to get your taxes done, the faster you're going to hear back from your CPA, right? Like, you're not going to be the one that like, oh gosh, let me get these other tax returns done that are not so much work before I have to take this one and dive into it and figure it out. So I recommend that. And then we talked about this a little bit earlier, but making sure that you're tracking by your levels of service. So like I said before, my buckets of service, I've got bookkeeping, I've got payroll, I've got profit first, and I've got special projects and cleanup. Those 5 things I'm tracking by to make sure that I can do that. In addition, if you're like me, small business owner, and you want to track some personal things, right? But you don't want to have 2 sets of books and all that. One thing that's interesting about QuickBooks, and I'm a QuickBooks user, and so that's what I'll talk to. I don't really use the other accounting softwares. I can't talk too much about those. But if you get the right subscription level, you have the ability to track stuff by classes or even locations. So maybe you've got multiple offices. You can actually turn on the ability to track income and expenses by a location. So maybe you have 2 offices. You have two offices in 2 different cities, and you want to know, hey, what's happening between these 2? Who's making the money? Who's spending the money? In the end, like, where do we need to do some things? You can do that in the system. So you can run like a company-wide P&L, and then you can run one by location, by each thing, all within one QuickBooks file. It's great. And then classes, the way I use it is I have a class for my company, for Springstead Solutions, and then I have a class for personal. And so I have a home-based business. I'm here in my home. And so I get a deduction right that for part of my internet, part of all my things. So I book all of those bills that I get to a personal class. And then when it comes time, and I don't have that reflected in my P&L because everything is other. So it comes underneath, right? It stays, so I have everything in other income if I run a regular P&L, and I don't do it by class if I'm just kind of wanting to see some numbers. And then I can run it by class and have none of that show up. So my CPA now can say, oh, here's all of the things. It's within my QuickBooks file. I don't have to send him other spreadsheets or receipts or utility bills or any of that. And he knows, okay, this is how much was spent on utilities. This is how much was spent on this. And he can just take whatever the amount is, whatever the percentage is for this year, and apply that to my tax return. So I love that ability. So if that's something that you think, oh, that would be really helpful, I have a feed come in for my personal stuff, and I literally just book everything to if it's a personal expense or if it's a shared, and then I can actually kind of track where I'm at personally too, like in my personal finances, right? So it's just such a great system. So there is so much ability to dial your financial reports in, and I don't think a lot of people take advantage of that. And so that is one thing that I just really highly encourage you to do is, again, if you're a DIYer, you can look this up. It's using classes and locations. There's lots of training on that. If you're a QuickBooks user, they tell you it's real easy to turn on. You just got to have the right subscription level. I think it's Plus and up. It might be in the one below it too. I'm not 100% sure off the top of my head. Or by locations if you have multiple offices. So make your finances work for your reporting. And if you're not doing that and you think, ooh, that would be a good idea, talk to your bookkeeper. Or if you're going to go find a bookkeeper, have these conversations up front. It's really important that you let the bookkeeper know what is it that you're wanting to see when you get these reports. Don't just assume that maybe bookkeeping isn't your thing and you've outsourced it and you just have to deal with these reports that you're getting. once we get them set up, right, it might take a little bit of time to get it all customized. Easy to run, just as easy to run the canned ones that come straight out of the system. So I just wanted to get on here today and kind of drop some of those nuggets for you. And if you're getting reports and you literally just file them away because you're like, I don't even know what to do with these, watch this again, have that conversation, and make sure you're getting those reports to help you make decisions that are going to reflect what you need to know and satisfy your curiosity about tax time, right? I always feel like first quarter comes and we're not really thinking about taxes. Second quarter comes and third quarter, we're kind of like, oh, it's coming. Then fourth quarter is like, holy sham, wow. We are going to have to figure out what's happening with taxes, and then trying to go back and figure stuff out. This way, you just have a picture as it's going through each month, and you don't have to, kind of be stressing at the end of the year. So that is my live talk for y'all today. I hope that this was some good information for you. I'm really passionate about, people getting information that they can use. The financial world is it can be so stressful that if there's these simple tips and tricks that can help alleviate any stress, and you can help feel like you've got a good idea of where you're at in your business, something you should do. So have that conversation with your bookkeeper, with your CPA, get that information. The other thing about this, which I think is an ending, is I am on some groups with other peers that do bookkeeping, that do payroll, and one had put out kind of a call of information like, hey, has anyone heard? They had a client, they needed to get a P&L for the last 2 years, and they went to their CPA to get the P&L, and the P&L obliged, went back and did 2 years of P&L statements and did not tell them they were going to charge them for it because that wasn't their bookkeeper, right? So the small business owner had no idea that wasn't just something that a CPA could do, and it was work for the CPA rather than going to the bookkeeper. There's just like all this confusion on getting a report, and this poor person was stuck with a fairly large bill to get some reports that should have been pretty standard. So another word of caution, if you have a bookkeeper and you're not getting reports, or it's not part of their service package, or you're not sure if they would charge you for it down the road, ask. Make sure that you're aware. Don't end up potentially getting stuck with some bill. All of a sudden you're like, oh yeah, I want that information, request it, and don't know that it's part of the package. It really should be. I think most people, it should just be a part of your bookkeeping package. And if it's not, have that conversation why and what it would cost to get it, right? So that is it for me for today. I hope that this was helpful for you. If you think it would help someone else, please share it. I would appreciate it. I am going to be right back here next Wednesday at 11 a.m. Pacific Standard Time. Christmas week, woohoo! And next week I'm going to talk about the compound effect. So I don't know if you all have heard of it. It is a book. I had it here. I was going to show it to you. You know that thing, you've got something in front of your face and then all of a sudden it's just gone. So it's the compound effect, and how I like it because of how it really ties into, the concepts of profit first. So we're going to talk about that. And then I am considering doing a book club starting Q2 of 2021, and we'll look at a book that really helps with finances and business finances and all that good stuff. So if you think that's interesting or would be interested, let me know. Drop it down below. And if you have a suggestion for a book, drop that down too. I'm going to talk about the compound effect because it really fits with profit first. And we're wrapping up this year, and I would highly encourage, when people get to their taxes and they say, man, I got to do something different. What's happening right now isn't working. First of the year is a really great time to look at Profit First and launch it. You can read the book. You can launch out of the book. I call it the training wheels. Like, it is your starter. It is your foundation base. You can get it on Amazon. I'm launching a digital course February 16th that is going to really take you from the book to implementing. And then there's the option of hiring a certified Profit First professional. But if you're in a situation and you get ready to file your taxes and you're like, this is just not working, I got a tax bill and I'm not prepared to pay it, I encourage you to implement some sort of cash system, be doing something. And so we're going to be looking for books that really support this concept of paying yourself first, of making sure that you have an emergency fund established in case anything happens, a pandemic. I was able to really do a lot for a contractor this year in the middle of a pandemic that without Profit First, we would not have been able to accomplish. And even me as a certified profit first professional, when I helped them and started in June, I am amazed at how well this system worked and how much success they had with it. We paid off $35,000 in their debt this year. We doubled their salaries. They were all over the map. They didn't really know what they made. We were able to tune in what is it that you need to make, right? Because that's a huge thing. People go into business and you start not paying yourself. You don't even know what you need to make at this point. It's just everything is overwhelming and crazy. And then you're doing well and you hit the end of the year and Uncle Sam says it's time to pay up. And you're like, I can't. Like, how? And so that's our passion. We just want to help avoid that. And the beauty of the Profit First community is there's a ton of us and we are globally and we are all here to support. So yeah, so I encourage you, let me know if you're interested in the book club. Let me know if you have a good book to suggest that you think helps small businesses, independent contractors, or entrepreneurs on their path of becoming profitable and implementing a system. The book will have to be something that ties well with Profit First, because that's who I am, certified Profit First professional. But yeah, so that is where I'm at for this. I'm really trying to keep these fairly short, under 40 minutes. It looks like I might make it. I know anything over that, we're all just really too busy for that. So I am glad for those of you that tuned in. Thank you so much. For those of you that catch me on a replay, please leave some comments below. And if you wanting to connect to me, you can find me at springsteadsolutions.com. I wish you all a wonderful Wednesday, and we'll see you next week.